So this is my December 2021 update of the best places to put your money here in the UK. The savings accounts that are going to pay the highest levels of interest. I will go through all the different types of accounts so give you an idea depending on how you want to put your money away, whether it's fixed, easy access on a regular basis, all that kind of stuff in a moment. I'll also give you an idea of where I think the best places to put your cash if you've got, let's say, a couple of grand, 5 grand, 10 grand, more than that, those kind of things. So it's all ballpark pictures. I'll take you through them bit by bit, but let's start off with some news around app-based savings accounts. Now, they're not necessarily the same as a normal savings account. Okay, they're a little bit different. They work a little bit strangely in lots of ways, but often you can get the better rates of interest there. Now, you know from a few months ago, I told you about the Claro app paying 2% on up to 3 grand that you can save in there. So that's definitely worth checking that one out. I get all the details in my video from October and information over on the website. Another one that you probably know about already is Chip. Now, some bad news for anyone who has the Chip Plus One account. This opened up almost a year ago, exactly in December 2020. And this offered 1.25% interest on savings of up to 10K. Now, it wasn't quite as simple as that. I told you these accounts never are, because it was only free to people if they had up to 2K in there and they want a plan called Chip Lite. Anything above 2K to 10K, you paid a fee, which reduced how much interest you actually got. You were never actually getting close to 1.2%. At most, if you had around 10K in there, it was just over 1%. Now, they closed this account to new Chip customers at the end of the summer, so a couple of months ago. But now they said they're going to close these accounts completely. Well, actually, they're not going to close them. They're going to stop paying the interest on them from December the 8th. So you've probably already had some emails about this if you're a Chip customer. But if you missed it, you need to take action, because otherwise your money is just going to be sitting there doing absolutely nothing at all, earning you zero. So you want to move your money. Now, Chip have been suggesting in their emails that you move your money into their other account, which I focused in a previous video and I will link to it up here for more information. This one pays 0.7%, but it's easy access, so it doesn't have the constraints that the Chip Plus One account had, even though that rate is lower. And this might sound like a good idea. And in fact, if you're on the free option, that Chip Lite option I mentioned before, where you don't pay the £1.50 fee every 28 days, you can transfer over another 2 grand and have that 2 grand sitting in this new account earning 0.7%. Sounds quite good, right? Well, as we'll get to in a minute, this is no longer the best rate out there for easy access. So I personally wouldn't move your money over to that free option. I would move it to the best paying account you can find elsewhere. And anything above that, if you're already paying for Chip, that £1.50 every 28 days, that adds up. You know, that's 13 of those payments in a year, which is £19.50 in a year. Again, that will knock down how much you're getting from that 0.7%. Even though you can save more than 10K in there, you could up to 30K. In fact, they'll let you transfer over more than that if you're an existing Plus One customer. But even so, you can get that rate now elsewhere, as we'll go to in a minute. So don't do that, right? Do not move your money within Chip. Withdraw that cash, open up a new account elsewhere, put your money in there, because you'll get the same rate or better. Okay, and we'll go through all those different accounts in a minute, and you won't be charged any of those fees. So it's really important to remember, Chip Plus One, if you've got one of these accounts, withdraw your money, open up an account, put it somewhere else. Don't just transfer it over, and worst thing you can do is just leave it in that Chip Plus One account. Now, the other new one I want to tell you about is an app called Tally. Now, Tally has also launched a new savings account. This one is going to pay you 2% interest, so that's pretty good, up there with Claro and the other best kind of accounts you've got. But there are some important differences with this one with 2%. For a start, it's a 1-year fix. So that means you are locking your money away for 12 months. Now, we'll talk about the best 1-year fixes in a moment, but that 2%, it is better than the others on the market. 1.37% is the best one. But you do have to pay a £20 fee to open up Tally. And what that means is based on the kind of that 1.37% you can get in another fix elsewhere, you need to put at least £3,250 in that Tally account for it to actually earn you more interest than you would in another 1-year fix. Now, you might think that's fine. I've got more money than that I want to lock away for a year. And that's great. You can do up to £20,000 in that account. But what Tally does, unlike most other savings accounts, and this is a really, really important thing to think about when you're putting your money into savings, is it protected? Now, the Claro account I mentioned before, a lot of the accounts I'm going to talk about later on, they are protected by something called the Financial Services Compensation Scheme. That means if the bank or the app, whoever it is, they go bust, your money is protected. You will get it back up to a limit of £85,000. Really, really, really important, okay? Particularly, I think it's really more important when we're talking about some of these fintech startups, which don't have much of a history. They could be fantastic. They could go on to be the next big thing, or they could just disappear in months and not kind of come through. So you want to make sure you've got that protection, I think. Tally doesn't have that, okay? Because it's about gold. The whole idea of this app, Tally, is your money is held in gold and you get a debit card you can spend with it and all that. There is none of this protection. Now, Tally says if it was to go bust, then you would get your money back because it's held in a vault somewhere in, I don't know, Switzerland or something like that, in actual gold. And you would get it back minus a 1% fee, which would be kind of like the kind of processing fee that the administrators or whatever would deal with. But I still think that's quite a risk. When you factor in that £20 fee, so you need to have more than 3 and a bit grand in there, plus there isn't any protection. The more money you put in there, the more you want that protection. And we're not talking about huge amounts difference when you look at the other options available to you. So again, I would give that a miss, but I want to let you know about it. It's not going to be in my top picks, but it is out there. Let's move on now. Let's talk about easy access accounts because we have got some interesting news here. I say interesting, positive news. The latest best buys you can get for easy access have now jumped up in the last few weeks. There is now an easy access account from Synergy Bank paying 0.7%. That's the highest we've seen for a long time. You know, we went down to like 0.4% in the summer. 0.7% with Synergy, so that's great. When I mentioned just now that chip account offering 0.7% with a fee, that's why they don't add up, why the chip one is no good, because you can get it from Synergy at 0.7%. Or there's a double access account. So it's not easy access. Easy access basically means you can take the money out whenever you want and there's no penalty. This one from Aldermore is a double access account. And this means you can take your money out twice in a year and still get their interest rate of 0.75%. So you will get that interest as you go along. And I would say this is about if you're taking out large sums of money. You know you don't need it until, I don't know, a few months later on. You need a large sum, you take it out once, great. And the next time you want to take money out, again, it's a large sum. This is not about taking small amounts of money out because you will lose that rate. But if you know you can put it in there, then this 0.75% is a really strong rate to go for. So that's your best kind of 2 easy access accounts for you right now. Shawbrook Bank just below that 0.67%. Now you'll notice though those rates still pretty low, particularly when you know that inflation is currently at 4.2%. That is massive. It's the highest it's been for a decade. So our money, our savings are all losing value every single day. But it really is still important to try and get that best possible rate that you can. Really try and stretch it as much as you can. Move that money, get that best rate. What I would say though is when you're looking at the account you have right now, if you've been following my videos and you've actually got your money in an account that is paying 0.6%, 0.65%, something like that, it's not actually such a huge gain to move it to an account paying 0.7% or 0.75% if you've got relatively small amounts of money in there. So for example, to move £500 from an account currently paying 0.6% to one that pays 0.7%, you'll get an extra 25p after 12 months. That's not really worth it, the admin and the time to go into doing that. Obviously, the more money you have, then maybe you want to make the call. So an extra 10k, moving it up that 0.1%, that's worth an extra £5. Not a huge amount, but again, it's something, isn't it? It's worth having a think about whether you are going to do this or not. But if your money is sitting in an account paying practically nothing, we're talking 0.01%, 1.05%, then absolutely move that money. Get it in the best possible one you can. If it's paying 0.2, 0.3, 0.4 even, I would move it. Just maybe when it's a bit more marginal, that difference, maybe it's worth waiting to see if we see these rates push up a little bit more. And actually, speaking about easy access accounts, you might have seen that NSNI, National Savings and Investments, they increased their rates on their investment bonds last month. They were 0.01%, again, really poor. They are now 0.15%, which is still pretty rubbish. So don't think just because you've had an increase, great, I'll stick it there. No, move that money to someone that's going to pay you a lot more. In fact, you should have hopefully moved it already, but I know a lot of people still got their money in those accounts paying absolutely nothing. So it's a good indication of why you should be moving your money, because you are losing so much keeping it in those low paying accounts. Let's have a look at regular savers now. Now, a regular saver, I'm a big fan of these. Told you most months about this if you've seen these videos before. The whole idea of a regular saver, sometimes known as a monthly saver, is that every single month you put some money aside on a regular basis. So they're really good ones to help you get in that savings habit. Your paycheck comes into your account, your salary gets paid in, and straight away you move £200, £300, £400, whatever you can afford, into your regular saver. And it sits there as well, generally for 12 months. There are different rules for different accounts, but it will sit there for 12 months. And although some of them you can take the money out, and sometimes the money goes on for longer, normally this is a nice way of locking your cash away for a year. So it really helps you save, unless there was an emergency, you had to get it out, but you save and get the interest all paid at the end. Now, the best paying one of these is still the NatWest or RBS digital regular saver paying 3.04%. You can only put aside 50 quid every single month. Now this one, I've had people tell me, readers and viewers have got in touch to say they've opened this account and they've put in £1,000 as their initial deposit, and they have earned that 3.04% on that grand from day one. Now the terms and conditions say you can't do that. I've asked NatWest, they say you can't do that, but people have told me they have done that. So it might be worth, if you do open up one of these accounts, you put £1,000 in at the beginning, see what happens. The worst that's going to happen, I suppose, is they don't pay you the money on that account and you just take it out and put it elsewhere. But it's worth giving that a go. Otherwise, you can put in £50 a month, as I said, until you reach £1,000. Then you won't earn any interest once you've earned more than once there's more than £1,000 in that account. You'll continue earning it on that first grand, but nothing above that. Now below that, we have a new regular saver to tell you about. This one is from Nationwide. As long as you have one of their current accounts, they've introduced a regular saver paying 2%. So this is, again, not fantastic compared to inflation, but it's double what you're going to get with most other savings, regular savers accounts. Most of the ones the banks, the best they've got is 1%. So 2% is fantastic. The most you can pay in every single month is 200. Isn't fantastic, but it does mean that at the end of a year, if you keep the money in for 12 months, you'll get just under £26 in interest. If you had it in an account paying 1%, then that's going to be a lot less than that. So it's well worth giving that a go if you have a Nationwide account. I would not open up a Nationwide account just to get this regular saver. Now, as I mentioned last month, there is a TSB account also paying 2%, but that one only lets you pay in £125 every single month. So again, really isn't worth opening up a TSB account to get this regular saver. If you have one, then maybe it's worth doing that. 125 quid in TSB, maybe 200 quid going into the Nationwide, 50 quid going into NatWest. Those little bits of money, they're at least giving you a better rate of interest each month from that new savings you're making, the new money that's coming in from your salary, or maybe you're transferring it across, cascading it across from other savings accounts. At least that is earning a little bit better interest than elsewhere. Now, if you don't have one of those accounts, you just want to open up one with any kind of bank or building society, then the best one is still with the Coventry Building Society, 1.05%. That's a variable rate, so it could change, and you can put up to £500 into there every month. There are other regular savers. I've got details of all of those over on the website. Now, fixed savings accounts. These are ones like that Tally account I mentioned before, where your money is locked away for a certain period of time. As I said last month, I wouldn't be looking for long fixes right now. We don't know what's going on with interest rates, whether they will rise, whether they will increase. It looks like that's going that way. But then we've got all this new breakout now with this new variant of COVID, which could sort of mess things up a little bit. That might delay the Bank of England increasing their interest rates. But even so, I wouldn't want to fix for more than a year, really. Now the best one, 1.37% with Zopa, 1.36% next one with Investec, and 1.35% with Masthaven. All pretty much similar kind of deal there if you do want to lock away for 12 months. I would actually think if you are looking to do this, you are thinking happy to lock your money away for a year, then I would look at something called Raisin. I've mentioned this in previous videos, so I won't go into a huge amount of detail now. All the details again, I mentioned it again, all over on the website. Essentially, if you use Raisin to open up a savings account that they've got listed there, you will get a £50 bonus as long as you put away 10k for at least 6 months. So if you're happy to fix anyway, then this might be a nice way to get you that little bit extra. The best 1 year fix is with Chartered Savings Bank, paying 1.27% for a year. So less than you get with Zopa, but that 50 quid will absolutely outweigh that. Or I think a better option, if you just want to get that 50 quid bonus, you could look at a 6-month fix with Aldermore. This 6-month fix will pay you 0.86%, 10k away for 6 months. After 6 months, you get the interest, you can take your money out, and you'll get that bonus. If you want to fix it again, you can, but obviously you wouldn't get that bonus again. That bonus is once per person. The first time you open up an account via Raisin, the first one you open up is at 50 quid. You can't open up multiple accounts within it. Now I'm filming this video at the end of November, which means December's premium bond draw hasn't taken place yet at the time that I'm releasing this. It will take place in the next couple of days. So I can't give you an update on how I do on that. I don't know. I'll let you know next month. But what I can tell you, this is really interesting, is that Money Saving Expert did some research and found that there are more than 2 million prizes that have been unclaimed. So people have won and they haven't claimed their prizes. And this totals more than £74 million. That's the fund that's available. Now this could obviously go back a long time, but it absolutely just shows the importance of, if you've ever had premium bonds, log on, find out if you were one of those winners and you can claim it. They don't run out at any time. They're there, sitting there, waiting for you to claim. You can even possibly, if you had someone who's deceased, maybe a parent or grandparent who used to have premium bonds and for whatever reason you haven't cash them in and transfer them out as part of that estate movement. You can even find out if they have got money that's owed to them, and they will still get those winnings, although it is slightly more complicated that way. But it's definitely worth checking that out and seeing what goes on. And generally, the rule as it goes with premium bonds, if you've got more than 5k in savings, then having it in premium bonds with the average rate of luck should get you more than you get in the best easy access savings account. Now, as I mentioned before, those easy access savings accounts are creeping up, 0.75% with Aldermore if you that double access one. So you might think I'd rather have a more guaranteed amount of cash from the easy access savings than take the chance with premium bonds. It's really up to you, but it does show that the higher those other interest rates go, those easy access accounts go, then the chances of you getting more from a premium bond does reduce. But for the moment, I'd still go with a premium bond with stashes of cash over 5k. And on that, actually, that leads us in very, very nicely to talk about the best places to stash your cash based on certain amounts of money. Before I do that, just a very quick reminder, I do these videos every single month. If you don't want to miss the updates, not just on savings accounts, but the best current accounts, the best credit cards, make sure you hit that subscribe button and that little notification bell. You'll find out as soon as those details are released. And I do update on a much more regular basis. Let's say every couple of days, every day, depending when the big rates change, over on becleverwithyourcash.com. That's my website. I will update the best buys, the best accounts, all the ones we've spoken about just now. These can change. You might find you look at this video mid-December and things have already moved. So make sure you head over to the blog and have a look. I will link to that below. Right, so quickly jump over to the blog, to becleverwithyourcash.com. Let's have a look at the best places to save your cash based on how much money you've got to save. Now, if you've got up to £3,000 and you've got an iOS phone, so unfortunately not on Android, if you've got an iOS phone, then I would look at the Claro app. This one will pay you that 2% on up to £3,000. So it's the best place you're going to get for that sort of lump sum of cash. Now, if you are on an Android phone, then maybe you want to look at the Virgin Money M Plus current account. You can get 2% on the first grand that you have saved, actually 2.02% on the first grand you have saved. You can open up more than one of these. So if you want to have 2 or 3, then absolutely you can go for that. I'm not actually convinced that it's worth opening loads of these, because every time you open up a new current account, you will be credit checked. And there are other current accounts paying a lot more every year. It might not be interest, but it will pay you more. So the Halifax Reward account will pay you £5 a month, 60 quid a year. That's 3 times as much as you'll get from a single Virgin Money account. So absolutely, I would consider which bank account you want to open before you open up loads of those Virgin Monies, but it certainly is an option to consider. Now, if you do have between 3 grand and 9 grand, this is where I'd go. I'd have that Claro app to start off with. I'd also have at least one of those Virgin Money accounts. Then I would go on to the Club Lloyd's current account. Now, this one is a bit more touch and go here, actually, whether this is still the best bet for the next lump sum of cash. If you have 5k in that account, you will get an average rate of 0.78%. So that beats, obviously, those easy access accounts I mentioned before. If you have anything up to £4,000, it's 0.6%, which is less. So you could argue there, if you've got less than 4k, you're better off going with that Aldermore double access account. But the Club Lloyd's current account does come with some free cinema tickets if you open up the account, the Club Lloyd's account. And if you are going to the cinema, they can be worth it. But if you don't want that faff, you don't want that hassle, then maybe have a look at one of those best easy access accounts that I mentioned before, either the Aldermore one or potentially the Synergy Bank one, because you'll get roughly, if not the same, a little bit less interest, but you don't have to faff around with direct debits and all that kind of stuff. Now, the next one to talk about is if you have 10k to save. And this one, if you're new to Raisin, as I mentioned before, I absolutely would have a look at opening up an account from there, the Aldermore 6-month fix. 0.86% is the interest you'll get, and you will get a £50 bonus on there. So that's really worth considering that one. Now, if you already had that £50 bonus from before, I wouldn't be looking at this one. I'd probably then start looking at maybe premium bonds, and we'll talk more about that in a second. Now, if you have between 10k and 19k, again, it's basically just puzzles, putting these things together like building blocks. So again, start with that Aldermore one, or maybe with premium bonds. Then also have the Claro app, have the Virgin Money apps. You've got some easy access stuff available to you, earning that 2%, you're guaranteed the money. With the Club Lloyd's thing here, again, that really is more about if you had that Aldermore one, if you're looking to put in sort of 10 to 15k on top of the Claro and Virgin Money, I would go for premium bonds right now. And in fact, if you have more than 19k, again, I've got this kind of same sort of mix here of options: Investec, Claro, Virgin Money, premium bonds. You could obviously want to keep it simple, go for one of those easy access accounts or just premium bonds and put it all together and see what happens with those. But if you want to mix it up and you're happy to do that, then this is the current mix that I would go for. So that's it for this video. Don't forget updates and all of these over on the blog, becleveryourcash.com. Here are some other videos you might find interesting as well on the matter of savings. My name's Andy Webb. Thank you so much for watching.